Hey, what's up, family? My name is Brehon, and I'd like to welcome you guys back to the channel. We love focusing on our own financial and personal development. Now, family, I hope you guys are having a phenomenal end to the week. Hope you guys are excited and ready for the weekend. Now, before I get started, I would like to continue just giving you guys a word out of one of my favorite books, The Greatest Salesman in the World. Top 5, I think you should have this book in your library. And it goes like this. Today, I will master my emotions. And how will I master my emotions so that every day is a happy day and a productive one? I will learn this secret of the ages. Weak is he who permits his thoughts to control his actions. Strong is he who forces his actions to control his thoughts. Each day when I am awake, I will follow this plan of battle before I am captured by the forces of sadness, self-pity, and failure. If I feel depressed, I will sing. If I feel sad, I will laugh. If I feel ill, I will double my labor. If I feel fear, I will plunge ahead. If I feel inferior, I will wear new garments. And if I feel uncertain, I will raise my voice. Family, that's what it's all about. Mastering your emotions. And when it comes to the stock market, 95% of traders lose their money in the stock market. And a lot of it is because of their emotions. You know, this game is 85% psychological. And if you can master your emotions, set goals, stick to those goals, make a plan, stick to that plan, man, you can create a lot of income for yourself when it comes to trading and investing long term. Now, the CPI report came out this week. We expecting 9.1% inflation, and the market let it roll off of its back like water off of a duck's back. And you know, why is this? What's going on? Well, let's take a look at the technicals. Remember, we know all this bad news is coming out, and the stock market doesn't go down like it's in an elevator. It goes up, it goes down. It's like a roller coaster, right? It's like a roller coaster. But we want to make sure we are getting in on the down days, riding it up, and we want to jump off before it heads on down. Okay. And so when we're day trading and swing trading, those are the attitudes that we want to take. Now, if you're a long-term investor like I am, I do a little bit of both. 15% of my income is still buying stocks, still buying ETFs, still buying index funds. And so I'm long on those. And, you know, that's the way we create wealth, is truly by developing a long-term plan. But we can make small amounts of money along the way doing some swing trades or doing some call or some put options. Now, when we take a look at the SPY, the first chart I have up is the monthly chart. Now, the monthly chart gives us a good indication of the overall movement of the market, right? And so after we hit this high, we see that the market is trending down, right? And so I have this black line here, which is a 20 SMA. We are in the third month below the 20 SMA. We are approaching this green line here, which is the 50 SMA. And so that will truly be a test of how low we go or how we rebound off of this continuous decline. And so as of right now, the month of July, we are still bearish. No matter what the day-to-day movement of the price action is, for the month of July, we are still bearish. All right. And so that's something that you need to consider. We always need to look at the long-term play, because again, back in 2008, 2000, when we fell below the 20 SMA, we were below that 20 SMA for 10 or more months. Okay. And so again, we are trending down. All right, now let's take a look at the weekly schedule. What does the weekly charts tell us, right? So the weekly charts are pretty much telling us the same thing. We are trending down. But when you take a look at the 4 previous week, well, and including this week, which is the 5th week, let's take a look and let's see what's going on here. It appears that we are having a reversal to the upside, right? So that's what it's showing us. It's showing us that there could be a potential reversal to the upside. And as we know, the market goes up, comes down, up, down, right? Up, down. And so I expect, again, you've been following this channel. I talk about this all the time. 20 SMA stocks never move too far from that 20 SMA. So we've been moving and trending down good ways away from that 20 SMA. So it's time to get back. So I expect us to get back to 385. I expect us to possibly get to the 20, not the 20, but the 50. That's going to be a challenge. That's 430. That's 434 when we take a look at the weekly. So can we get back to at least 412 or 400? That remains to be seen. But on the short term, on the weekly charts, it looks like we are establishing an uptrend. Now, a confirmed uptrend would be once we could get above that 20 SMA and we can stay above that 20 SMA, similar to what history shows us. And so hopefully, if we do get above that 20, we could ride this thing back up. But based on all of the bad news, high interest rates will continue increasing on housing and things of that nature. But we do have gas. We see that gas has been coming down for the fourth consecutive week. And so some of those prices in certain industries are really coming down. But again, as interest rates continue to increase, more people will have less money to buy on their homes. Banks will loan out money at higher interest rates. And so people will ultimately have a little less money to spend. But as of right now, we are trending up. And one other thing that we need to really remember is that the market, the brains behind this market, oftentimes they are ahead of the market before we could ever know. So sometimes the market is 6 to 8 months ahead of the news. And so when we're talking about this trending down, everybody's selling, some hedge funds may be buying up, maybe thinking ahead that maybe, we have seen the worst of the worst when it comes to food prices, gas prices. And so there may be some upside. They talked about possibly layoffs. Again, 11 million jobs out there. Can't fill a lot of these positions. And so this is a different type of recession. And so, but as of right now, on the weekly, we can see that we are beginning to trend up a little bit, which is a positive sign. Now let's take a look at the daily chart. Now, when we take a look at the daily chart, all right, again, we know that the trend is down, right? So a nice long downward trend here. And so history tells us that, once we have these huge runs up, we can come back down. So right now, we just crossed above that 20 SMA again on the daily chart. And there is a possibility that if we can stay above this 20, we can get back up to 392. Because that's what I'm expecting. I'm expecting us to get back to maybe 392, possibly 400, then consider, exiting positions, placing put options, and we're going to ride this thing back down. But as of right now, when we take a look at the daily chart, we have had a bottom of around 360, and we've been a little choppy, but ultimately we are trending up. We are trending up. So hopefully, let's see how Monday's candle develop. If we can stay above that's 20, this is a huge sign, man. This is a huge sign that possibly we can get back up to 393, possibly 400. All right. So remember, once we have a crossover, the 20 crossover, the 50 going up, man, that's a good sign that we're gonna have possibly a good period of upward movement. All right. And so one thing that we always should do is just take a look at the past charts, because the past charts never lie to us, right? There is a pattern. Once we cross over once the 20 cross over the 50, man, nice run up, right? So once we cross over it going down, nice run down. And so what we need to happen to confirm a nice upward movement, we need the 20 SMA to cross over the 50 going up. And then we can say that, hey, possibly we could be out of this thing. Possibly the market could be moving to the upside. But again, There's so much bad news out there. There's more bad news to come. And we just want to make sure that we are ultimately prepared for whatever come our way. All right, long-term investors, we want to make sure that we're continuing to buy into our long-term positions, because again, we all know that ultimately the stock market, the price of the stock market will increase over time. So when you really think about the history of the market here, we always have little hiccups in the market, but ultimately we're going to be trending up. So let's see on the weekly if we're going to hit 350, which is what I expect. I expect us to hit 350 and go even below that. But that's all still remains to be seen. But in the short term, if we can stay above that 20 SMA on the daily charts, we could possibly make some more money running up. Now, I hope this video added some value to you. Now, if it did, hey, please hit that like, hit that subscribe button, and keep coming back for more great information. All right, peace.